Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, June 6th, 4:31 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, uptrend, large cap uptrend. Hey, now being joined by mid caps and small caps as they broke through critical resistance areas today. We might be green across the board by the end of the week if this strength holds. Check the trend gauge over here. Leaders, bullish uptrend. Short term uptrend. The big cap indexes, S&P and NASDAQ, now being joined by the rest of the indexes. Same situation with the 50-day and the long-term 200-day moving average as the market continues to defy the bears. What happened today, as I said, small caps and mid caps broke out. It'll be obvious when you look at the charts, and that's what we like, is obvious breakouts, especially after breaking out for one day on Friday, pulling back a little bit and testing that breakout area yesterday, and then blasting to new highs today, confirming the strength from Friday. And we also got a nice rest day on the NASDAQ 100. We've been talking for a while about how far that is extended from its 50-day moving average. The more that works sideways, the better off the overall market would be, especially if we see rotation into healthier sectors and market caps, and that is what we're seeing. So here are the numbers on the day. The RG8 up 1.6%. This is our 8 ETF growth composite. This is what you want to see. Growth acting well, outperforming. S&P 500 up 0.24%, NASDAQ 100 just barely down, Dow just barely green, mid caps up 2.05%, Russell 2000 up 2.7%, Global Diversified 60/40 up 0.33%, in-house GROTECTION up 0.33% on the day. It's Titan 25 Tuesday. We're going to go through the charts of those 25 stocks. Started this a few weeks back to put away the fears that as long as these 25 stocks held up, the market couldn't break down no matter what anybody that's a bear would say. Let's go right into it. Here's the S&P 500. So you see the 2 days up, Thursday and Friday. Made a higher high yesterday, just a little too fast, too far, too fast. Made for a decent consolidation day. Lower low today, but closed near the top of the range. Good action here on the S&P 500. Let's go to the NASDAQ 100. I talked about how extended we were from the 50-day moving average. Still, even after being flat today, 9% above. Prior day was 9.3, 9.5, 9.1, all the way back to 9. This is what we need. Really, we've had 3 days of tight closes. We need to work off this tremendous overbought situation while the stocks that led the way up there go sideways also. Let's go to the Dow. Successful test of the 200-day moving average over the last 2 weeks. Big breakthrough. The 50 and 21 yesterday, pulled back, bounced off the 50 today. Good action here on the Dow. Now let's get to mid and small caps, the winners for the day. You can see here's the break above that key 450 area on Friday, pulled back, tested those four moving averages that are all stacked up, the 8 to 21, the 50, and the 200, and then today blasting above Friday's highs, confirmed strength. I don't think the bulls could have asked for anything better than that. Now, this is above, look at the 460, these two areas right here, 460.89, 460.36. Pullback should stay in that area, really between, let's call it Monday's close, which was 458. So 458-ish on a pullback, really as long as you don't break below the 450 area, but a gentler pullback supporting this 460 breakout is what we want to see. Now IWM, same type of chart, firmly now above these April highs, and it's being led by small cap growth. Let's look at IWO. This is small cap growth, the growth half of the Russell 2000. Here's the key day. This is the day that we started selling off because of the regional bank fears on 3/9. The prior day we closed at 233-ish. We're at 237 now. So ran into resistance on that level on Friday. Nice pullback yesterday, blasting higher. Compare that to The value portion, IWN, this is where most of the banks are. Much worse looking chart, still below the first day of the drawdown of the regional bank crisis, still below the 200-day moving average. Trying, definitely making new highs, going back to those first 3 days where we had the harsh sell-off, but clearly growth outperforming overall. IWM uh, above the 200-day moving average. Pullback tested the 200-day moving average yesterday, blasting through to higher highs today. We got a little bit of resistance here from before we broke down on the overall index. This is um, factoring in the pullback prior to the banking crisis. So there we are, 185-ish today, 184.31 is the final. That's good stuff. So let's go to the VIX. The VIX is broken. The VIX is broken. Well, the broken VIX, it's not broken, first of all. I explained that in prior videos. Making a lower low, getting a bit extended to the downside, but it's being confirmed by the strength in the S&P 500. So staying in sync there. UUP, inverse sync is what I should say. UUP tight range today, up 0.32%. How did that impact the precious metals? Let's go to silver first. Just flat. Let's go to gold, GLD. Barely up, still below the 50 and declining 21-day moving average. Gold and silver stocks. Really a tight inside day, so not a lot of traction on gold here. How about bonds? Let's flip to bonds. They were mixed again today. The longer end, well, let's go to the broad average, up positive. TLT, the long end, up the most by far, up 0.59%. That means long-term bonds pulled back today. So let's look at the TYX, it's confirming that they pulled back. The 10-year kind of subdued, actually up 0.16% on the day. Like I said, the lower ends, the 10 and down, were much weaker than the 30-year. So, and then finally, Bitcoin. The news today, the SEC sued Binance yesterday. They sued Coinbase today. Coinbase is publicly traded, but Bitcoin didn't go down, which I found interesting. Up 6% on the day, although up 6% on the day, although Coinbase did get smacked. We'll take a look at Coinbase real quick here, down 12%, was down as much as near 20% at the lows. So let's get to the tail of the tape now. You can pause this. I'll hit the highlights. Tight range chop for the most part during the day. But again, the big standout is what I have down here on the bottom line. Mid and small cap stocks break through resistance. QQQ rests. And in-house, the portfolio changes on the day. We trimmed our SQQQ position on the pullback, bought TNA early in the day, so we caught most of that breakout on small caps back through that 180 level on IWM, and then we added to NVIDIA on the 60-minute stochastic crossover setup. So took that up a little bit. Our beta now is at 1.72, and as I said, bottom line on the day, mid and small caps break through resistance. NASDAQ 100 rests. The day count up to 2-day consolidation. This is really the big cap tech resting, waiting for the mid and small caps to catch up, and they are catching up quickly, but they've lagged for quite a while too. 8 and 21 continue to trend strongly. Let's get to the Titan 25. So this is basically the big 25 the 25 big cap stocks that lead the Dow, the S&P, and the Nasdaq, and very clearly the big 7 you're going to see at the top of it. Apple, a little bit ahead of itself yesterday after that VR headset, $3,500, man, and it won't even be available for Christmas this year. But bounced at the ADMA today. Great chart there. Microsoft, great chart number 2. Google, great chart number 3. And these are the big 7, the magnificent 7, the 7 biggest market cap stocks that are just leading the way this year. Amazon, strong chart number 4. Nvidia, strong chart number 5, pulling back to that 80 MA with the stochastic cross on the 60-minute. Tesla, look at this buying in Tesla. We've been internally discussing who it is with the big footprints that's doing that, and very possibly Will Danoff from Fidelity is finally, with the Fidelity Contra Fund, is finally taking a bigger position. He made some positive comments on the earnings report, and accumulation like this can't hide. It's absolutely a big leading stock. The only it's a stage 1 base. The only downside was we were creating that base below the 200-day moving average, but we blasted through that uh, this week and the end of last week. Great strength being exhibited there. And finally, great chart number 7 is Meta, the big 7, magnificent 7, leading the way. These don't have as big a weight in the Dow, which is why the Dow has been lagging, but certainly the NASDAQ 100 and the S&P. So now move on. AVGO, Broadcom, got a little bit ahead of itself here too. Reported earnings pulled down, bouncing off the ADMA. This looks fine. Pepsi, lagging. Well, XLP Staples had been lagging. We've been talking about how growth has been leading. So this is the largest cap stock that's, let's say, not acting so well. Really just a bigger impact at a $182. Its market cap size and its price is not as impactful to the Dow as it would be if it were market cap weighted. Costco, uh, starting to show some relative strength, breaking across that 500 level. Cisco, certainly a fine looking chart. So far only one bad chart. Oh, there's our second bad chart, and that's T-Mobile. This was impacted Friday with the news that Amazon is considering offering a cell service to Prime customers, and T-Mobile really didn't react that well to it. Really didn't have a much of a reaction to its last earnings report either. Again, this isn't a massive impact, $128 market cap. It's a pretty big stock, but not as big an impact on the Dow index or on the NASDAQ. United Health, actually, T-Mobile is not in the Dow. Um, United Health continues to lag, biggest stock in the Dow. Certainly not doing it any favors this year. Berkshire Hathaway, approaching new highs, looking good. Johnson and Johnson, not so good. So really 3 negative charts. ExxonMobil trying to get back above the 200-day moving average. This is a negative chart too. Visa recovering from its sell-off the prior week. Procter and Gamble, yet more weakness in the staples. Goldman Sachs, second, actually third now highest rated, highest price stock in the Dow, looking to put in a bottom. Home Depot, still also looking to put in a bottom below the 200-day moving average. McDonald's uh, peaked. I mean, again, this is really considered a staple stock, and staples are lagging. This is impacting the Dow. Amgen, also weak. Boeing, Boeing had some more bad news today on the Dreamliner, but it bounced at that critical 200 level back above the 8 and the 21-day moving average. Caterpillar with a big move up. This is one of the big, there was big news out of China on Friday about some stimulus, and Caterpillar big time took advantage of it, breaking that downtrend, strongly breaking back above. I mean, this is a big cap stock, but this kind of looks more like what the mid caps and small caps have done lately. And finally, Salesforce pulling back to the 21-day EMA. So all in all, let's bring up the Titan 21 here very quickly. So this is basically, I said 2021, it's 25. So basically here's the 25 and their weights in the individual indexes, S&P 500, NASDAQ 100, and the Dow. You can see these names down here, which were primarily the weak ones, are impacting the Dow. But Dow showing some strength, bouncing off the 200-day moving average. If we can get some money flows into stocks like United Healthcare, Goldman Sachs, we can certainly do a little bit better than we've been doing lately. Microsoft, actually, Microsoft is higher than Goldman Sachs now. I need to update these weightings, but bottom line is these 25 stocks holding up pretty well, and market will be fine as long as they're fine. That's going to wrap it. As always, love to hear your feedback. Emails don@revereasset.com. The phone is 855 Real Wealth. We continue trending higher like this. I'll probably stop covering these as much as I did, because the point was that the market wasn't going to break down as long as these stocks didn't break down, and the market's gotten healthier. So there's probably some better things that we could spend some time on. Leave a comment on YouTube if you want to continue seeing the Titan 25, or let me find something else to feature on Tuesdays. Always like to hear your feedback. So you can either email me, don@revereasset.com, or leave a comment in on YouTube if that's where you're watching this. Or you can call us 855 Real Wealth if you're interested in becoming a client. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We protected the capital the way we needed to during the bear market. Now we're participating with some good action from the indexes and from leading stocks and leading sectors. And with that, I'll wrap up Tuesday, June 6th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.